Good evening. Welcome to EquityAxis News, your home for all your financial insights and real-time stock quotes. I'm Sandra Chororo. Let's get to business. ZSE-listed property concern Zimre Property Investments released its financial results for the half year ended 30 June 2019. The company recorded a 124% increase in revenue, coming in at $3.3 million from the $1.5 million recorded in the same period last year. This was attributed to an increase in rental incomes, which went up to $1.5 million, a 47% improvement from the $1 million recorded in the prior year. In a statement accompanying the financials, the company's chairperson said rental income was boosted by the contribution of Sawanga Mall in Victoria Falls, which was partially opened in April 2019, and improved inflows from the Blawayo student accommodation facility, which has increased occupancy levels to above 65%. The company's profit for the period grew by 58,962%, coming in at $116 million from the $197,000 recorded in the prior year. The rise in profit was due to fair value adjustments following the currency reforms earlier this year. Can you cut please?
Performance 1.5 million for the half year compared to 1.1 the previous period, the first half of 2018, which was a 43% improvement. Stand sales, one of our major business lines, recorded 1.75 million in 2019, up from 415,000 the previous period, a 323% again growth in that area. And revenue as a result was 3.37 million, up from 1.5 the first 6 months of 2018, 124% growth. Staff costs 650 compared to 620, very marginal movement in an economy where inflation has been doing what I said it is doing, salaries, I think as a lot of us would confirm, have remained quite static to a very large extent. So 5% negative variance against prior period, and then admin costs 1.16 million versus 1.2. These went down. There were a lot of other cost containment measures that were deployed to try and contain costs, despite the inflationary pressures that they were there. And just looking at further items there, fair value adjustment. We're a property company, and one of the major items that come through our balance sheet and income statement is what we call fair value adjustments, purely arising from the valuation of properties and then comparing two respective periods. 121.8 million fair value adjustments were recorded for the half year. In the prior year, in 6 months of 2018, it was a negative 11,000. So there has been that jump. Again, there are issues to do with currency changes and so on that would also impact some of those numbers. There were also exchange gains that were recorded during the period of 3.3 million in the half year. There was no exchange gain in the prior period, so there's just been that jump as a result of the changes that happened to currency. Then profit before tax, 126 million compared to a loss for the same period last year of 169. I'm not going to attempt to say what percentage increase that was. It's a massive 70-something million percent. Profit after tax, 116 million compared to a loss of 197 the previous period. So that's the performance on the income statement side. I'm just going to rush through balance sheet items, starting with investment properties. When you look at our balance sheet, you realize that investment properties command the largest single item on that balance sheet, 173 million compared to 44.9 as of 31 December. The 30 June position is unaudited. The 31 December position is audited. Trade and other receivables, 3.5 compared to 5.2. The major part of those.
According to Bloomberg, Zimbabwe's dollar has been the worst performing currency in the world this year. Since the government allowed the formal trading of the bond note in February, the currency is depreciated to 13.19 Zimbabwean dollars to the US dollar. According to Bloomberg, this equates to a loss in value of 81%, making the currency the worst performer in the world this year. The currency is even weaker on the black market, where it's being changed at $15.80, according to Market Watch Zimbabwe. Following yesterday's published statement on Twitter, Netone has hyped its SMS and data tariffs by between 33% and 75%. A dollar can only buy you 10 SMSs from the previous 40 SMSs. The 20 megabytes daily social media bundle now costs $1 from the previous 75 cents, while the 40 megabyte daily social media bundle has gone up by 50% to $3. This is a second hike in only 2 months since the 8th of August, when the state-owned network operator hiked its data and SMS tariffs this year. Thank you for watching. This concludes our evening news. Catch us next on our markets segment as we catch on the markets daily with Eben.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Good evening, viewers. Welcome to Markets Daily. An interesting trend on the stock markets following, of course, a 5-week loss trajectory. The stock market end of last week was up on a completely different path altogether. And this particular week, that trend continues. Today on the ZSE, we saw it was all recovery across the stock markets, as we saw all the indices actually make a gain, as we saw the All-Share Index gaining 2.73% to 171.79 points. The Industrials Index up 2.77% to 571.89 points. ZSE Top 10 up 3.06% to 155.38 points, while the mining's index remained constant at 262.50 points. 8 counters gaining, while 2 remain static, the 2 they being BAT as well as National Foods. The trend there, of course, would reflect investors taking to the stock market as a safe haven as well as a store of value. Our rises of the day, we have FML, Medtech, Miko's, Old Mutual, as well as Star Africa. Interesting to note that Medtech has been gaining at 14.29% to reach 0.40 cents. Mutual recovering from yesterday after having shed significant value yesterday. Now it's in the positive, gaining 13.64%. Star Africa was the biggest loser of the day yesterday, but today rebounding, gaining 11.88%, significantly closing at $13 against the United States dollar on the parallel market closing at a whooping 19.2 against the United States dollar, the all February of 2019. Just to jog your memory, when the interbank was launched, it was launched at an exchange rate of 1:2.5, but today we're sailing at 1:13, a significant loss in that particular regard. Part of what Bloomberg said, look, even Argentina is no match for how badly the Zimbabwean dollar actually is performing. Also feeding into the trend that we've been seeing is the fact that yesterday we saw inflation figures being published. Well, of course, Zimstats did not publish the headline inflation, but they gave us month on month, from which you've been able to deduce that there has actually been an inflation headline that comes in at 288%. Well, let's see how the year closes. Estimations are, or indications are, that we may be headed for an inflation that is north of 600%. Of course, Professor Steve Hank would say that we are currently sailing at 761% where inflation is concerned. But basically, where inflation is concerned, what we're seeing playing out is a scenario where the local pricing is pegged against the US dollar. So what happens to the currency is also reflected across the pricing, resulting in escalated inflation. Well, this concludes our news as well as our markets daily for tonight. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website www.EquityAxis.net. From the EquityAxis team and I, Danki and Asante Sana.